Well, good morning, everybody. Hope you're well. Hi, Chris. And welcome to today's live market watch. And we feel as though I've been here before, I'm afraid, prior to maybe even Tuesday, Monday or Tuesday. G'day, Ross. Hey, Gary, how are you? Anyway, look, let's do it. Let's have a look at what's going on. And let's obviously put this up because obviously these are the opinions of, or the analysis based on what I think not necessarily representative of gold markets, and nor should it be taken as personal advice to take trading action. You've got trading plans, risk management strategies, which should be absolutely at the fore at this stage, and to guide your trading actions. So yeah, interesting times indeed. Let's start our usual look around what's happening in the news. Oops, that's the wrong one. Give me a second. Why is that not updated? Because it's obviously not popped higher. Let me resolve that by putting some new news up. Sorry, I did think I had. There we go. Sorry about that. Okay, so we had another week a day yesterday with US equity markets looking a little shabby, to say the least. Most of the major indices down 1% on rising bond yields yet again. We're up to 1.48, so up about 7 basis points from where we are when we started in the circle last night. And the market's responded as it has done every time we've got a spike in bond yields. Tech has been hit hard again, down about 2.7% overnight. And of course, we are not only seeing US futures markedly lower in Asian trading, we've got local equity markets following that weaker US lead. Though they are off their lows at this stage, they're still looking pretty ordinary. Last time I looked, the ASX was down about 0.75%. The Nikkei was down well in excess of 1%, but we'll check in on what's happening in a moment, obviously in more detail. US dollar index is up as precious metals edge lower again. We'll again have a look at charts in a second. And it is quite a busy day today with, we've got some Australian trade balance and retail sales out, but European retail sales and employment rates out later this afternoon. And of course, the jewel in the crown of today's data is the US weekly jobs report. And of course, markets may, or as well as been already cautious, maybe even more so, as we're still waiting for a stimulus package to pass through the Senate in whatever form it finally takes. And of course, just to add some interesting stuff to the mix, we've got the non-farm payrolls data out tomorrow, the monthly US employment data. So despite my bullish tilt to the market in the medium term, as I said last night, there's some pretty significant headwinds going on with these bond yields. And we explained all that last night. So if you did want the link, if you weren't there last night, you want the link to the recording, just drop me an email and I'll put it in the chat box just so you've got it. Let's type it in for you. Mike.smith@gomarkets.com is where you'll find me hanging out. So just feel free to drop me an email if you weren't there last night and want to review that. I think it was quite a good session in terms of explaining what's going on from the feedback that we got. Anyway, just quickly looking at questions. Good day, Shane. Good afternoon to you, buddy. Oh, right. Okay, let's have a look at some charts then. Oh, actually, let's have a look at what's going on. Let's have a look at the futures first. These are started low, popped up a little bit, looking as though they're dropping again, all in negative territory. Expect the same in Europe. If we look at just what happened overnight, You can see that we had that really late sell-off in the Dow, which took it into negative territory. Before that, it was trading around neutral. The Nasdaq just started miserably, had a little bit of a pickup, and then just continued its merry way down. And the S&P followed suit. Obviously, the S&P has some of the Nasdaq components within it. And yeah, again, we got that late sell-off, but really across the board, apart from the banks again. You notice the map here in the US. We talked about JPM on Tuesday and how well the banks were doing. You can see here that energy did okay. And obviously the banks popped up again, nearly 2% on JPM. So consequently, of course, we're not in a grossly happy place overall. Interestingly, there's as I said, there's some big data coming out later this afternoon. There's also an OPEC meeting, which will be interesting because we've got oil touching highs. We just go back to the futures contract. You'll see where that's at. Remember, we touched 65 on Brent earlier in the week. We're down to 60, just under 64. WTI crude's dropped about $2, but that OPEC meeting, maybe this is in anticipation of no more production cuts and perhaps even a production rise. So just if you're in oil, just be aware of that potential market moving issue going forward. Let's just have a look at some charts around this just to put some sense and have a look at some FX stuff before we go into shares. Here's the US 500 daily. You can see we essentially closed and supported around about that 3820 last night. You can see how this is important. Really testing the lows that we hit before we had that big pop-up. We've given all of that back, and you can see that slightly softer session in Asia today, but you can see again it's quite choppy. We sort of shifted down after the open, moved up slightly. Now we're flatlining going on. Russell is not quite as dire, but we are above a support at 2160. But if we look at the Nasdaq, you can see that in all its dubious glory. Look at, I mean, this is why this market is really, really hard. Okay, whichever way you slice it, it's a tough market to trade because we've got these up, down days. Rarely 2 days, as we talked about yesterday, rarely 2 days on the spin. In fact, we've had 2 down days. Take it back to support at 12,630 maybe, I guess, is the support level. Again, down slightly in Asian trading, but again, looking very precarious on that. And it's going to need some good news over the next couple of days, which may well pop the market back higher again. And that's why it's so difficult. If we look at the US dollar, had a move up yesterday and some follow through today. So consequently, of course, my bearish tilt towards gold continues. We're breaking key level after key level. So we're now, after breaking that 1750 level, we're now heading down with some velocity towards 1680, which is the next key level, and probably the most significant of them all. If we do get a breakthrough this, we're going to see it down at 1500, unless things change radically. But you can see here how it's resistance and support at that level of 1687. So looking very bearish, and silver closed below 2630 for the first time really since last week in January. A little bit of recovery today on the futures contract, but still not looking particularly favorable. And of course, because of that, what are we seeing? We're seeing some interesting stuff with the US dollar pairs. Really difficult FX market to trade, even short term right now, just as a warning. So here we see the euro USD, so that US dollar weakness pushing the euro back down to support, some continuation of that in Asia down to that 120.40. A break of this could see us down around about 73 pips on the hourly chart, but expect maybe some resistance at around about 40 pips to the downside if we do break If we look at the Aussie dollar, whoop, let's get this back. There we go. There's the Aussie dollar. And the Aussie dollar is holding on to support at 177.80. We've talked about this level before. So we're actually in a better place than we were at the start of the week when we saw that drop below down to this level here, which is the next level of support at around about 176.80. So we're about 100 pips above that next support level, but it looks as though it's managing to hold support going at the moment. So we have tested it this morning already in Asia. You can see that initial drop down, but we've recovered all of that, and that might be due to the data that's come out already. Or it might, and also contributory, of course, is the equity recovery. But if we look, at the Kiwi, it looks very odd. If we look at the Kiwi on the daily chart, we are flatlining really on the Kiwi USD. So it is very specific currencies that are getting hit. The euro is not in a good place, and if we put on a US yen, you can see we've been talking on this for the last 2 or 3 weeks, but you can see this not only move to 107, but a break through it, and on today's trade we are actually moving through that. That puts it really, if we close here, it'll be the highest close since May last year. But we've got quite a remarkable up move on that. If we see on the hourly chart, we are actually testing a key level to the upside, and this is the one that sort of more than anything caught my eye, 107.07. Bear in mind that US dollar yen doesn't move quite as much as some of the other pairs. So generally speaking, we would probably put a, let's say we were interested in a trade at that point there, we'd possibly put on a, so ATR is only 7 pips or 8 pips. So if we put it at 12 pips down, I guess, to use one ATR, and would be at 107.14 to get into this. So with that yen weakness, let's just have a quick look at what's happening. New Zealand yen looked as though it was going to pop last night as we were talking. It was actually testing this 78 level, pull back. We are up in Asian trading again with that Japanese yen weakness, and we can see not a dissimilar story. We'll start on the daily chart with the Aussie yen. So again, looked as though it was going to break a key level at 83.75. Pulled back quite significantly, ending towards the lows of the session, as you can see there. But again, similar pattern, a little bit of a drop down, and then we've got that big pop higher in the last couple of hours of around about 30 pips. So be interesting to see if we've got some momentum to take us back up and retest 83.74. But again, we're only talking 40 pips from where we are now. So nimble is the key if you're brave enough to take anything on in this market. And there is a fairly strong argument for position sizing lower if you are going to get in. Good call, Ross. So if we look at the US Swiss, we'd put a key level there at 91.90. As you can see on the daily chart, it was resistance here. We're retesting that now. Pretty neutral in Asian trading. So looking, we have traded above that. And with it being so close to 92, there's our short-term resistance at just over 92. Nice round number again. You know how the market likes those. ATR is about 6 pips on this. Again, not a big mover, generally speaking, the US Swissy. So you have got a line in the sand there, but it does depend on that US dollar weakness continuing, of course. A good spot, Ross. Okay, so yeah, I think I've sort of made it pretty obvious that I'm not particularly happy about where things may be at the moment. If we look at the US Canadian dollar, this is typical of a lot of the other pairs that we haven't looked at yet. There's a lot of triangular stuff going on, which makes it very difficult to trade. So if we look at the US CAD, we've got 80 pips to the downside, about 140 to the upside. So if we were to put this on a 30-minute chart, even an hourly chart, you can see here, even with this breakout trade here, you're only talking really 35 pips up to that level. If we do break that, you've got another 50 pips up to the next level. You have got a pivot high there, but the close proximity of this next resistance of about 11 pips would suggest that maybe this is the one to wait for, that 127, again, nice round number on the US CAD. So that's where the FX markets are. Let's have a quick look and see what's going on with shares, and they can come back and have a peek at this as well. So if we let's just refresh this. Now, one thing was obvious when I was looking at this before. Not only, of course, is it down, but there's a couple of things which are, we're not at the lows of the session, which were around about 1% down, but we are pretty miserable at 0.82% down. If we look at advances versus decliners, not as bad as you would think by that level of sell, and one of the reasons for that is that banks just won't stop going up. So we've got ANZ here. If you see there, 0.72. We talked about this being a great entry on Tuesday, potentially. If we whiz down, we can see CBA is nicely recovering. Resources are having an off day. BHP down nearly 3% off highs. There's NAB higher. There's Macquarie higher, which were another one we referenced last night. Energy's doing okay today. We're seeing energy at least hold its own. Oz Minerals are bucking the trend a little bit with a slight move higher. And interestingly, travel stocks are doing well after a good session yesterday, bringing it back up to $5 on Qantas. We have turned negative into positive as the session's gone on. And if we look down here at Webjet, there's Westpac higher, there's Webjet again, up another 5 cents, so that's nearly 1% on the day. Apart from that, it's a heap of red going on. Afterpay and Zip seem to be just about holding on. Just watch APT. Just watch APT. I did reference them yesterday. I favored Zip because of the price, but there is potentially $30 upside to the 150 top it hit in the not too distant past. So we'll just have a quick look at some of those and what's happening in a little more detail on some charts. As I said last night, US banks just continue to look pretty strong. There's yesterday's session, so back to that high on JPM, that closing high of around about 152.90. That seems to be translated into the Australian context, and this is an impact of bond yields. It's probably a safe place to be with bond yields. There was yesterday's trade. We talked about this on Tuesday, and the $27 key level broke that with a vengeance yesterday, and we're up significantly today and trading towards the highs of the session. We note. Look at CBA, nice recovery, really nice sort of double bottom formation there. There was the breakout if you're really on the ball, but really you wouldn't be into it until this candle there. And I think I talked yesterday, really, I would like to see a break of this 86.40 to get excited about this compared to ANZ and Westpac, which are the ones I think would doing similar. There's Westpac. Although that's a red candle, it is actually in that it's lower than it's open. You can see that yesterday's candle, which broke that level at 24.40. We are trading towards the highs of the session, towards the top of that candle, even though we did duck down and retest that level early on. Macquarie, as I said, one of the medium-term picks from last night for Q2. This is looking increasingly interesting. So 148.35 is possibly worth keeping an eye on over the next few days. LYC holding on to its gains it's made over the last 4 days after the break of 618. And if we go down to some of the least or energy, I think Santos, when we talked on Tuesday, with a pick, quite simply because it was quite close to that key level at 750. The other one that was really close to looking as though it might break were Iluka, but they've pulled back a little bit. You can see there that 750 resistance. We've had a pullback from there. Let's just have a quick look at Qantas. So Qantas on a daily chart, once we broke $5, it looked as though that might be important. So that's $4.95. That's $5, and we actually did that last week, but then this happened. Okay, and we had a pullback yesterday, pullback 2 days ago, completely reversed that, back up to $5 yesterday, just over that $5, and we just got that little push higher, trading towards the top of the session on Qantas. So this is not done yet, and as I said, this is one of the medium-term picks that I put out last night. And if you like Qantas, then Webjet may be worth having a look at as well. That's the high that we're targeting at around about 606. Make sure that's updating. There we go, that's better. Around about 606, so it's around about 45 cents from where we are now, which is not insignificant. It's about 8%. But this would be the level we're interested in, 574, and then a 30-cent up move to there is 6%, as we discussed. Not, I think I'd rather be in Qantas than Webjet at this stage. We mentioned Afterpay just out of interest. And it looks as though it's holding support at 120. We are towards the top of the session, even though we started down. So maybe the market thinks, well, look, this is worth holding. Way too early to be interested in this at this stage, but it's possibly worth keeping an eye on. If this survives a 0.8% down day and a 2.5% drop on the NASDAQ, perhaps this is not a bad place to be. Now, if there is a stimulus package, because Afterpay have got quite a significant footprint in the US, if there is a stimulus package passed, I would expect Afterpay to potentially bounce higher, because obviously money going in people's pockets means they're going to spend. They still can't go on holiday anywhere, so that will benefit Afterpay. So there's just a little maybe short-term thing just to keep an eye on. Yeah, so LYC, I think I put LYC up already, but just in case you missed it, because a couple of questions on it. There's the break we had on Tuesday, and we've got follow through. A bit neutral today, but still holding its own, not dropping significantly. So it's down a fraction, a couple of cents or so. In terms of the short side, well, what's doing badly? We've talked about what's doing well. Let's have a look at a few that really could get whacked to the short side. Kogan seems to be just about holding on to 1420. Also in the retail space, we've got JB Hi-Fi. Retail have not done particularly well lately, but JB Hi-Fi have actually outperformed today. You can see there that we're kissing this 200 MA. This could be important if we get some market stability and it breaks that 200 MA. That could be a nice trade to the upside, so one to perhaps keep an eye on. So retail are holding their own, but however, if we look, let me just close a couple of things down, just because I'm getting messages. We think these futures are starting to recover a little bit. If we look at, where was I going with this? Sonic. So if we look at Sonic Healthcare, looking very weak again. Healthcare are looking pretty terrible. Now, in terms of a low close, this looks like it could be it. Let's just be conservative, move that down so we get that resistance, support, support, support. Whichever way you slice it, we're at an important level. If we were to get interested in a short trade, and Sonic was where we wanted to put some money, we're talking an ATR of about 69 cents. So we want a 30-cent drop below that, which it actually touched in early trading today, but we have had some recovery. So let's just look at a couple of other of the resume. One I haven't had a look for a little while. Yeah, again, key level there. You can see that 24.40 hanging onto it by its fingernails. Down again today, though not moving much intraday, but down testing that level. And let's look at Fisher Paykel, another one I haven't seen for a little while. Oh, that looks. There we go. So if we just take this right out, you'll see that there was the initial support. Once it broke through that 200 MA, that was the support of interest. Now we're down testing. We've broken through that $27, which looked important around here. And now we're really testing the next level, which is that level there, which if we bring it back up, you can see we're testing it there. So a break of 25.91. If it breaks that, there's very little stopping it down to around probably the bottom of that support, so down around 8%. So healthcare looking very, very shaky at the moment across the board. Let's just have a quick look at see how perhaps see how Cochlear are doing. Again, one I haven't viewed for some time to give it a chance to load the data up. Our 200 MA looks vital there. You can see how it was support. So a little way to go, even though we've got this double top formation. You've not got a lot of downside. Maybe about 1% down to test that 200 MA on Cochlear. If we go to the US, let's just have a look at some of the ones that we're watching. Really, devastation and chaos were the, apart from the banks and energy, were the, so anything that held its own is really, really did quite well. So if we just look at some of the ones we've referenced before, Caterpillar recovered quite well. So we're still holding on to, what's the wrong way? We're still holding on to support at 215. So we actually were down very little. And if a stimulus package is passed, as I said yesterday, I think this will do quite well. Let's have a look at Microsoft, which I don't think did very well at all. So on the daily chart, you can see we're really back down to test their support level. I would say there is the support. If we look at the highs, there's a previous resistance right at 1, 2, 3, 4. So it may well test 224, but that could present with an opportunity going forward. So as I think I said last night, I won't get interested unless it breaks 230. So holding off until you get the right setup is the way to go. Let's have a quick look at the VIX to see where market I think again, we need to play catch up with this. So there's the VIX, popped a little higher yesterday, not going anywhere today at all. Remember, this is a futures contract, not the spot VIX. I'm just going to take some of these lines off. Okay, so really, as I said, 25 is the key level to just keep an eye on with this. If we break 25, we could be just starting to stall. Any others you want me to have a look at? Just have a quick look through and just making sure we've got everything covered. Okay, charts of the day for today. On FX, it's the US yen. I'm looking for a larger position, expecting a smaller upside. If we were to trade anything, of course, this all goes with that caveat on. If we look at MU, which is one of the other ones I mentioned last night, again, not dramatic, but just pulling back. Pulling back to key level there. You can see it tested this last week. But if we do break this, it could result in some more selling, possibly taking us down to 84. It does move quite quickly, this one. So it's hard to look past the banks for my pick of the day. And we actually quite liked where Westpac is sitting. But obviously, if you're in a bank already, if you're in ANZ or Macquarie is slightly different, but if you're in any of the big four, then if this candle turns green and we get a close, that would be quite a close that's towards its high, that would be quite bullish. Interesting, the MACD signal line is below the histogram, but I would suggest that if we do get any move higher from here, that'll change. But it has been on a remarkable tear to the upside. Would I short silver? Okay, let's just have a look at S32 and then we'll have a relook at the great chart. Are you in this, Ross? So there was the breakout we talked. Even there, the potential breakout on Monday. A little bit of a pullback on Tuesday, up a little bit yesterday, up a little bit today. S32 looks as though it's going quite well. So we are at highs of the session, I guess. Now it's given us a full picture. So yeah, it does look strong, and again in this market, it's quite quite interesting to look at. Hang on, Joshua. Let me just any uranium stocks to have a look at. I don't know whether any of them trade on. Obviously, Rio have a uranium. No, thought Paladin might be in there. Let me just have a quick. I'll just put a silver chart up while I just ponder that one for a second. Might have to do a little search to see. But I think most of those are out of the, apart from the big multi metal miners. So what was that? What I was doing? I think most are not in the 200. Okay, what a short silver. A very, very short term, perhaps if it broke 25.84, take it down to $25, maybe a profit target above that. So it'd be a really scalping trade if I was going to do that. Sorry. So EGR, certainly, Anthony, we can have a look at EGR. Right, we're going to have to look at that outside of this. Let's just do a quick just having a quick look and see if any of these might be. We just do the uranium stocks first. Because uranium does it's actually not a bad article I've just found. I'm just going to pop that in. If you're interested in uranium and what it might do, it's not one that I look at often, but there's quite a nice article on uranium. Since I found it, I'll pop it in there. Right, ERG. Let's just have a look at a 6-month chart, see where it's at. ERG looks as though it's going south. If Ectograph is what you're into. Obviously, it peaked at around about 70. So we're getting a profit-taking pullback. I mean, that's an amazing run-up since January, where it was 17. But down 6% today. Looks as though that could continue. If I saw this sort of chart and I was in it, I'd possibly be taking something off the table and then wait for a move perhaps back above that high, or back above that sort of level from yesterday. Was that yesterday? Let's look at 6 months. Okay. Oof. No, that's 110 there. We've got 78 middle of Feb. It's tracked below a resistance at around about 67 today. Yeah, I'd be looking for possibly, if I was interested in this, I'd be looking for a move above 78 to get back into this. I'm just going to do a quick search. See, Paladin's probably the major. Paladin's probably the biggest. Let's just see if Peninsula Energy are in there. Nope. No, sorry, I can't help you with uranium stocks. But if we look at a Paladin chart, let's just look at that. Obviously up a little bit today. So again, let's look at a 6-month chart possibly. Interestingly, that's dropping. That can't be right. That's not Paladin, that's why. That's better. Phenomenal run-up. Some nice key levels on this, so we could be testing support at around about 44. 47 over 47 would be an interesting place. Let's just take it back a little further and just make sure. Yeah, so those are probably the key areas. I hope that's sort of useful. Sorry I couldn't be more helpful than that. Anthony, I hope that was good for EGR. Any others, guys? Okay, let's Let's look at Flight Centre as well. We didn't look at Flight Centre. We looked at Webjet and Qantas. And perhaps we should have looked at Flight Centre. They pulled back from, we tested this last week at 70, well, let's call it $18. Tested this last week, but really has not looked particularly happy since then. Even worse performing than Webjet or Qantas in that space. Would I buy Facebook? I don't know. Right. Let's check in where we are with Facebook. Facebook, I certainly wouldn't. We are sitting on the 200 MA, which is interesting, and you can see how choppy these stocks have been again. There is 255. That's the key level. That's where the 200 MA is sitting. Maybe if we get another bounce off this, and we see a move over that 265 level, that may be of interest. And Zoom, yep, Zoom had another down day. Really testing that 200 MA. We had 2 down days on Zoom. Thought it might test this 200 MA, but I'm looking for a bounce to see if there's anything going on. But that's really 2 significant days to the downside, which looks as though, once again, you're going to have to be patient. I think I suggested last night $400 might be the level at which you might be interested. Okay, interesting, Anthony. In case I missed it, could you please look at gold to see whether it can enter? Okay, well, let's look at a weekly chart on gold. This is why you shouldn't be looking at anything long. There's no evidence of a bounce, so I'm assuming you're meaning short. So what we're looking for here is key levels. Undoubtedly, there's a long-term trend to the downside. And so the question you've got to ask is, well, how far could it go? Because we've obviously got some momentum to the downside. You can see what those EMAs are doing even on the daily chart. They're starting to diverge again. So it looks as though there's continued momentum in this. Sorry, flicking around a bit here. I think there's possibly a support around about $30 down from where we are now. That 1687 looks important. Resistance support here. So in terms of downside, I'm not that convinced as much in this. If we get a settling down of treasury yields, we may get we may get the US dollar just pop up a little bit, and then of course if there's a stimulus package agreed, we'll maybe see the USD move back into that range that it's been in for a while. So I probably wouldn't be jumping up and down about either way with precious metals unless you're trading intraday. If we look at this, we appear to have some short-term support around about 1708. So again, if you're trading short-term, that key level I mentioned is around about 1.1% down, which is quite significant in dollar terms on gold. I can't see a reason to get long on this until it would break that 1752 level. And then at least you've got 22 cents to the upside you can possibly take advantage of. But you're trading very small sort of margins with this. And just be very careful. If you are entering this, just be very careful around big data points. If we do get some movement on the euro following that unemployment rate, we may see a move in USD. If we do get, and I would suspect the market's going to move, or market's going to have a big choppy move after that weekly employment, that wouldn't be unusual. So again, you could see these move within 20 to 30 cents in a heartbeat. So just be extraordinarily careful if you're scalping this. I hope that sort of helps a little bit, Anthony. I wouldn't be, it's not something I'd be jumping up and down about. I think the whole market is in a state where it is really, really choppy intraday. So I don't like a long-term hold in gold. I don't see any inflationary pressures coming. I don't like, I think the USD will have a short-term pullback once that stimulus is agreed, assuming it is. So we could see a small pop in precious metals, but it will be small. All good. Okay, guys, well, look, I think that's probably it for today. I hope that's been sort of useful again. Now, if you're not into this session that we've got on Monday, which I think is going to be a goodie, I'm just going to quickly flick it up. I don't think any of you are first stepping tonight, but this intermediate trading clinic, which we've started 2 months ago, I think most of you are in for this already. But if you're not, it's a 2-part session. So we've got one next Monday, one the Monday after. It'd be great to see you there. If you register anyway, there we go. I've popped it in the chat box. Register anyway if you can't, even if you can't make it along. Interesting, the futures are starting to pop higher again. That's not by much, but the Dow's nearly neutral again. So yeah, typical of where markets are right now. Anyway, look, guys, trade safe, take care of yourself. We shall see you soon, either on a Monday session or we're back on Tuesday, obviously, at lunchtime. So in the meantime, trade safe, trade very, very carefully, please. Position size according to where market risk is now, and have a great weekend. And drop me a line if you need anything, of course. Gigi, great. Anthony, you're welcome. Good stuff, Shane. Be great to see you there, mate. And we'll catch you soon, guys. You're welcome, Stephen. We'll catch you later, guys. Okay, see you now. Bye.